Hey everybody, thank goodness it's Friday. It is Friday afternoon. Bo Yoder here for 3D Apex Trading and rethinkyourroi.info. I was just going through some of the emails here while I wait for my girlfriend to put her makeup on for us to go out and have some fun this Friday night, and wanted to just do a quick and dirty video to answer a question that seemed to be a theme this week, which is what is 3D? What is 3D Apex, and what does it mean to look at the markets in 3D? Well, really, that is describing what we call the 3D Apex lens, which is our modality of looking at different time frames to try to find moments in time when all the different time cycles come into what we call synchronicity, come into the same place at the same time. This creates sort of a, rather than a push-pull environment, as you'll see me describe here in a little bit, but actually an environment where everyone's coming into the market with the same directional bias. This creates a very high probability reversal event and can really be a good catalyst for movement. So let's go ahead and walk through this and show you. This is a trade that we talked about pretty extensively this week in our live training and mentoring room, and I thought it made a great example that I'd like to bring to you here. So this is the US dollar versus the Japanese yen, and we have three different charts within the 3D Apex lens. I'll just go ahead and focus on one at a time because it kind of lays the story out. You'll see the blue vertical line here, which is just a way to kind of keep track of where each bar was at the same time in real time. And what you see here on our 10-minute chart is kind of a double top. And if I run over here to the 30-minute chart, you can see that a little more clearly. So most people would see this as a classic reversal pattern, a classic top in the market. So let's go ahead and look at that within the lens of the 3D Apex methodology. So on the 30-minute chart, you can see that as the market is rallying here, we're losing momentum. This is our power indicator, our tool that we use to objectively measure how much energy and really how much passion there is in the market. You can see here there's no passion. It's really, really dead. And so that tells you that the market is in a topping format. It doesn't necessarily mean it's topped and that it's going to reverse. It means that you should definitely be on the alert for signs of reversal. The thing that's really interesting about this, and I want you to focus on, is that 3D Apex will give you what I call the not yet signal over and over again. So for most traditional traders, this is your short signal. You're going to go short here, and that's based on this price pattern, the double top. However, we want to look at this market in three dimensions. We want to look at it in different time frames because that can give you a great deal of contextual information as to whether these different time and price cycles are in synchronicity or they're actually conflicting with one another. And in this case, we have a classic conflict. If I go to a deeper time frame chart, in this case a 90-minute chart, you can see the double top is still there. Obviously, price action is price action no matter what the time frame, but look at that power. There's tons of power there. So think about this like whitewater rafting. You know, you're coming into an eddy. There's not a lot of current there, but right above, right below you is actually a raging torrent. Well, just because in the moment you're in some quiet water doesn't mean that there isn't water pushing against you or pushing for you in a different cycle, a different place on the river. Same way to think about this in terms of time frames in the market. The deeper time frames tend to have more power. They are more people involved in deeper time frames. There's more longevity to their trends and to their time and price cycles. And so as we measure that, again, this is not subjective. It's a very clear sort of scientific measurement. We can see that that double top on the 30-minute is likely to either be a poor performer or is likely to fail. It's going to take some time. The market needs to digest all of this bullish momentum before it can actually form a more serious reversal. So the not yet can be very frustrating. Oftentimes you'll see what look like beautiful patterns, and the market's telling you, you know, it's the timing isn't right. So the pattern may be there, it may be fully valid, but the timing is just not that great. And that's exactly the signal we got here at this moment in time. So let's go back to our 30-minute chart, and let's just push forward, and let's see how things change. So the market does push lower, gets everyone all excited about their double top scenario. Then look what happens. Drifting. No passion. Sideways movement. And after a while, that sideways movement makes people a little bit worried. They begin to exit their positions in fear that there may be a squeeze back to the upside. And sure enough, even though there's some steady momentum to the downside here, as you can see, the market pushes right back up to the upside. Now, this is this other vertical line, and again, this is sort of a reference mark for us to analyze here. At this point, we have some pretty decent momentum to the downside on the 30-minute. Now, remember, the confirmation chart, that deeper time frame, was telling us no, not yet. And it did so very accurately and helped us avoid all of this mess here. Let's go back and look, if I scroll back over to my 90-minute chart, let's look at where the momentum is as that chart reaches the green line area. So let's go ahead and just advance it there. You can see now the momentum here as it pushes up to these highs. Again, it's sort of a retest of the highs, almost a triple top, if you will. Momentum has greatly declined. I mean, there's still some momentum there, so we haven't fully digested that that reversal, but definitely the market's telling you that this last little push up is happening without too much passion or power. Notice what a difference that is from the previous observation, where we were actually looking at the market that was moving up in power and it just barely leveled off. Well, now we're pretty excited. Now we're seeing some confirmation that if this resistance holds, this could be a more timely entry to the short side in this particular market. And again, this market is the currency market, the dollar versus the Japanese yen. So let's go ahead and move forward one bar. Yep, sure enough, there's a reversal. Now we get to the interesting part. Again, the three dimensions of 3D Apex. If I go over to the 10-minute chart, I just want to draw an arrow here and highlight the fact that we have, for those of you who aren't familiar with it, this is a bearish engulfing bar. So this is a very bearish trigger candlestick on the 10-minute chart. We actually, as luck would have it, we have the exact same kind of bar over here on the 30-minute, also a bearish engulfing bar. And what's even more interesting now is we have a bearish engulfing bar if I go over to the 90-minute. So look at the difference now, okay? If we waited for our instruments to show us that we had synchronicity, and all three time frames in all three different cycles, which may have been sort of wafting back and forth at different times and in different ways, have all come together at the same point at the same time. They're all peaking out. They're all showing signs of reversal at the same moment. So just think about that. Think of the power and the energy it takes to turn a 30-minute, a 90-minute, and a 10-minute chart all at the same time in the same place. Well, that's a trade you want to back. That's a trade you're much more interested in. And so let's go ahead and go back to our 30-minute chart and see how this unfolded. So we got our signal, and there are some ways for us to enter on the 10-minute chart, get a little bit smaller stop, and better profit expectations. It sold off a little bit, kind of came back slightly to make you a little bit worried, and then boom, started to really fall in earnest. Look at the power reading there. Big push to the downside, really confirming that you're on the right side of this trade. Let's just go ahead and fast forward. You can see a good solid sell-off. Similarly, if we go over to the 90-minute chart, you can see there, good solid sell-off and another push to the downside. Look at how that momentum's shifted, right? Bullish, 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 getting a little erosion. We get our signal, clear as day, very objective. Three time frames all lining up at the same point in time, and there you go. Boom, you got your big sell-off to the downside. Okay, so now I can hear a couple of you out there kind of scratching your head and saying, well, you know, if you took the double top, I mean, it took some time and it meandered back and forth, but it did work out. It did pay off. Well, that's very true. But I just want to ask you the question. When would you rather have entered? Would you rather entered here and held through these hours of miserable back and forth movement, actually a rally back up almost to your stop, almost stopped you out for a full loss, missed you just by a couple of pips, and then you got your payout move? Or would you rather be sitting on your hands, waiting for that moment of synchronicity as measured by our 3D Apex toolbox, and then enter, boom, instant gratification. Nice solid move to the downside, good confirmation from your momentum readings. There's really not a lot of stress, there's not a lot of fear in that trade, and you can just see how beautifully that market moved to the downside. So that was just a great example from this week's trading in the live trading and mentoring room. Again, I wanted to kind of bring that out to you because it shows really how even within the context of a double top that did actually work, it didn't stop you out and it did actually pay off, there's a way to eliminate a lot of the stress and misery that many people experience in trading. There's a way to fine-tune your entries using very objective measurements and really an instrumentation tool set that's not unlike that a pilot has in their cockpit. You know, think about that. A pilot can can literally, and this is one of the things they do in order to get certified, they can literally take off and land the plane in a cockpit without windows by just relying on their instrumentation. We've got the same kind of things set up here. So once you learn how to use these very simple tools, the concepts are really easy to master, and then after that it's just a matter of executing with the discipline, really to wait until everything is in sync. If you do that, you're going to get very precise entries. You're going to get a lot less pain and misery on your moves. You're going to get a lot less stress because they'll tend to really move for you quickly. But also you'll get great risk reward, which a lot of the other more traditional setups just don't offer. So there you have it, a great example of trading in 3 dimensions and how a traditional double top setup in the US dollar versus the yen did not have the synchronicity, did not have the 3D effect. If you waited a couple hours, sure enough, that 3D effect came into focus, if you want to call it that, within our lens, gave a proper signal, and delivered a very nice outcome. So hopefully that answers some of your questions. As always, very happy to receive your messages. Go ahead and join us on Facebook or leave a comment on our YouTube channel. We definitely keep up with that, and we'd be happy to answer any questions you have about the 3D Apex. All right, so I hope you have a great weekend. It's been a great week for us here. Looking forward to a couple days off, and we'll get back involved with the markets on Monday. As always, thanks for listening. My name's Bo Yoder. Good luck and good trading.